Hey, everybody. Welcome back to Market Mavericks. It's Thursday afternoon, and I'm joined by Scott and Mike here. We are going to get into the nitty-gritty of what the heck is going on. We got the stock market at all-time highs, Bitcoin making new all-time highs. 10-year yield is still stuck in the 4.3 range, so it's not really going down much. But listen, people are willing to buy anything and everything. We talked about that last time. But let's start with Scott, give us a rundown of what is going on with Bitcoin. Is this just a reach for risk assets? Is there more to this? What's going on with Bitcoin?
I think there's a lot more to this for Bitcoin, although I'm certain that a boon for risk assets is obviously a tailwind for Bitcoin. I'm not going to argue that point, but I think Bitcoin would be doing what it's doing sort of regardless, as long as we weren't in a black swan or massively negative environment, which clearly we're not, because even our black swans send markets down for about 5 minutes before they go flying back to all-time highs. We can go through potential World War IIIs and tariffs and literally anything, and the market shrugs it all off. So clearly we're in that irrationally bullish phase of markets in general, which should have everybody just, having their spidey senses tingling a little bit. But for Bitcoin specifically, I mean, we've been trading above 100,000, basically. We had that dip there, but it didn't even close a daily candle. But since back at the beginning of May, this is Thursday, the 8th of May. And so, Bitcoin was either going to make a decision in this range. It was going to break up or it was going to break down. I would say right now, we had pretty clear selling for a long time there from some of the old whales. I mean, these guys were holding 10,000, 20,000, 50,000 Bitcoin and have been for years. $100,000 when you've got a mature asset with a ton of liquidity that's now been taken over by Wall Street and you were a libertarian who bought it to rage against the machine seems like a reasonable time to sell some Bitcoin. I think that's what was happening. But we also know that we have this demand, whether it's going to be inflated or real, will prove to be seen, but with ETFs and of course Bitcoin Treasury companies and all of these other entities. So I think right now we're in a simple supply demand dynamic. There's just more buyers than sellers at this time in Bitcoin. I don't think that's indefinite, but I do think it explains why we're pushing up to 114,000 right now.
Yeah, I'll show my chart here real quick, and I just want to show you guys this. But this is the one thing I'm watching here, and I think we talked about it last week, but we have this trend line that starts out back in 2017, connects right through the first high and the second high of 2021, and then literally in 2024, we tagged it right before that one pullback, and now we're just about to hit it again. So again, it's right around 115,000. So as a technician, that's going to be the level where I'm really focused in on to say, okay, can it break this? Can it break through this? If it does, 125 is very doable, even maybe higher than that. But that, again, is going to be the potential one level that as a technician, you want to see whether or not it gets rejected at that point. The other thing I would just point out is, and again, I was just thinking about this today, is if you look at the pattern formation in 2021, and again, people aren't going to like to hear this, but just my job is to speculate, right? And just to look at this. But is this kind of that same sort of pattern right here replicating from 2021? And also you have the stock market at all-time highs like it was in 2021 at that point as well. So a couple things to kind of think about. Mike, why don't you give us your rundown of what you're thinking?
It's a given that the stock market will go up. It has not gone down in the month of July since 2014, so it's over 10 years. As Scott pointed out, it's a given that Bitcoin will go up. Why would some equity treasuries be adding it to their treasuries if they didn't think there was risk of it going down? Because a treasury is supposed to be for safe assets, so might as well put a highly volatile risk asset in there. It's kind of scary. But that's the key thing. It's July. It's the time, and we just mentioned pre-show, the stock market's made a new high, NVIDIA is making a new high, Bitcoin's making a new high. It should be doing that. Bitcoin should be making a new high when the stock market's new high. Now, the rest of the space is picking up a little bit, but it's a question of how far it goes and how long it lasts. So I want to show a few charts just to get a lay of the land here and show you what I think is happening. So this is, to me, is what's going on. Is this is a Bitcoin to gold ratio on an annual basis. We've never had we only had 2 down years since Bitcoin's been launched, and Bitcoin to gold ratio has always collapsed during those years that we've had up down here. This is a total return. So this bar here, that's the bar so far for the S&P 500. That's a wonderful green bar going up, running hot. Everything's great. How long does it last? One thing that's just happened, the key remember thing that happened is it's potentially a lose-lose versus terrorists. Remember what caused Mr. Trump to push back? on to 90 days delay in tariffs is when the S&P 500 dropped about 20%. But now that it's back up here, we've added 50% tariffs on copper. We're emboldened to do more tariffs. We're adding 50% tariffs on Brazil. It's just kind of a shocker. And I want to tilt over to a key thing in my space that happened this week. What happened in copper? This is the US dollar price of copper. It dropped up to the highest price ever, $5.90. It looks very similar to the price of unleaded gasoline in 2008. Those of us remember well, that was my key catalyst. I was bearish. I was waiting for signals. As soon as I got to $4 a gallon, highest ever, I'm like, sell everything. It was a sell signal because it basically was an example that shut down consumer spending. It added costs to everything. That's kind of what copper is doing to business. But what I do, I'll end with this. What I want to do is overlay the difference here is this is the U.S. stock market versus GDP. It's 2.2 times. When people talk about the debt versus GDP at 1.3, it's nothing compared to stock market cap to GDP at 2 times. The last time we had a decent kind of commodity thing signal is an issue. By the way, this price in London is 20% lower. It's only the U.S. The stock market cap to GDP was about 1 to 1. So it's a highly risky situation.
So I guess my question, Mike, would be, we have copper tariffs. Copper just ripped about 10-15% higher. To me, I would be like, well, that should be inflationary. I mean, if you're building, you're going to use copper. But we've talked about, is there potential deflation coming? So can you kind of walk me through, like, when are you seeing are you seeing inflation? Are you seeing deflation, or inflation first, then deflation? Like, what's your kind of outlook there?
I tilted over to the headline here. Copper has always been is an economic indicator. When it goes up, it indicates there's demand pull for bond yields, for borrowing and expanding, and the stock market going up. But now it potentially is the opposite. Now the rest of the world is kind of failing. It's flailing. Certainly iron ore is, as Chinese government bond yields price at 1.66. The last PPI number from China was minus 3.6%. Severe deflationary forces in the second largest economy. It exports a lot of their stuff to the rest of the world, but the opposite now. So I think this headline here indicates what's happening with copper now. It's become a bit of a reverse indicator. And this is what I show you here. This is, I just all on the same scale. You take the S&P 500, divide by 1,000 per pound price of copper, 30-year yields, and copper in London in the same scale. They're showing the outlier here is the U.S. stock market, and this is copper and the rest of the world. It's starting to tilt downward. That's the problem. The rest of the world's got a problem, and it's completely dependent on that U.S. stock market staying up. But I want to end with one thing that it's just kind of came to my attention recently that most of our viewers might not know about, and that is you look at small caps. The Russell 2000 just reached the lowest level ever. This is since 1978 versus the S&P 500. That's what I show you here. This is the total return of that Russell 2000 index. Now, those are publicly traded small cap stocks divided by the S&P 500 total return. Lowest ever, it's just starting to bounce. At the same time, this shows same chart syndrome with the gold divided by S&P 500. But gold just bumped up against that good resistance. Remember, we were calling for the breakout. It got it. Now it's started to break down. Now, remember here, I've got a 50-year chart. Will gold be able to get above this line? That's the key question of the second half. Now, if it's just a normal back down, which everything's priced for now, that's wonderful. But then you got something here that small caps are just the cheapest ever, which shows you the main outlier of everything is that U.S. stock market, certainly large caps, S&P 500, it's most overpriced.
Sorry to interrupt, but just going back to small caps, right? So we know the Russell has not hit a new all-time high. It's still like 10% away from an all-time high, yet the NASDAQ and the S&P are at all-time highs. There's two ways of looking at that. One is that the underlying economy isn't really that great, and so the smaller companies that aren't the mega caps are struggling or not doing as well, or is there going to be a catch-up trade where, the Russell's going to just rip higher here and small caps are going to play catch-up? And I'm curious what you guys think of that. Like, which one is going to happen here?
Well, we hope there's going to be a catch-up. That's the hope. The key thing that's what we hope that Bitcoin ratio, gold ratio, which has been flat for 4 years, is going to catch up to beta. You used to lead beta. That's the hope, and that's to me is the risk. Is what my colleague pointed out today is when you pointed out there's tariffs have a big issue for small businesses. Most of them aren't publicly traded, and this is the key thing I want to point out. We've reached a unique stage in markets where tariffs are being completely emboldened by the stock market going higher. I mean, stock market going higher means Trump can just go say, Brazil, we're going to nail you 50% tariffs. Copper, we're going to nail you 50% tariffs. And what's the only thing that's going to really push, and what do tariffs do? They push back on corporate profits in the S&P 500, of which 40% is from imported goods. And it's potentially going to hit earnings. And by the way, my colleague Gina Martin Adams, our equity strategist, says we are now in mania mode in the stock market. The last time she said this was in February, before it corrected about 20%. So that's the key thing to think about here. Stock market is maybe a negative indicator because it's emboldening those tariffs that are going to pressure earnings. And the only thing that's going to really push back on those tariffs, as we saw it happen in April, is the stock market going down.
So Scott, do you think we will see some inflation from these tariffs, from these, I mean, you hike the price of copper. Is it inevitable, or are there offsetting factors here?
I think that inflation is always inevitable because it is the system. So, I think that inevitably we're going to get a whole lot of money printing eventually. That's going to cause inflation. I think that tariffs will naturally cause inflation at some point. I don't necessarily think we're going to 8-9% again, but I think that the finish line is pretty far to get to 2% based on the metrics that the Fed is using. The last percent is a lot harder than the first 5 or 6. And so I don't think that they're going to get there. I think the Fed is kind of backed into a corner right now. Listen, I'm no fan of Jerome Powell. I think transitory was one of the worst mistakes ever. We know that they tend to overshoot in both directions. But right now, I mean, if you are of the belief that the economy is extremely strong and that inflation has come down and markets are at all-time highs, why would you believe that he should cut? It just doesn't really make that much sense to me. Like yelling to cut while also yelling that we're in the strongest economy ever, it just doesn't make sense. So
Unless
you kind of have to have one or the other. Like
ways,
you should just, honestly, it just seems really pragmatic to kind of do nothing right now. You got to remember they pivoted and rates went up.
So right? Scott, I think you nailed it. When the bond yields go up, and the stock, certainly the bond yields, they told the Fed they were wrong. And the Fed finally acknowledged it after cutting another total of 100 basis points. And you're completely right. The key thing that every single day I hear that Mr. Trump emboldens his pushback in the Fed, I think that's more bullish for gold, because this is a breakdown of the order that switches the way we run a country more towards the example to the rest of the world, towards a third world country. But I just want to show you one chart that's happening is we've potentially reached the end game of how far we can go. This is an annual measure of the S&P 500 divided by GDP. It's basically the Warren Buffett model, stock market GDP. Right now at 2.2, it's the highest since 1929. So that's my point, is you got that right and you nailed it right. The Fed knows that they cannot cut in an environment when the punch bowl needs to be taken away. This is an example. Certainly crypto's taking off, stock market taking off. It's not when you cut rates, and unemployment's at 4%. But that's, to me, is the key thing, is people keep saying how bullish it is. I agree, everything's bullish, but that's the point. We're at that stage now. The only thing that's going to stop this, the only way you stop and get the Fed to ease, is when the stock market and the bond market goes down in terms of yield, bond markets, and tells the Fed to ease. Otherwise, there's no reason to ease. In fact, you should be tightening in this environment. In fact, that's what they did and started in about 1929. They had to start tightening because inflation is getting out of hand. But again, there is very few people who are actually involved in the stock market. Now it's the most exposed ever. That wealth effect is what the Fed, they don't say it as much, but any major money manager, certainly people like Scott Bessent, who was a macro trader, gets it, that this is all that matters now. Is that stock market has to keep going up, it has to stay up, and that's the only reason the Fed should ease, if and or when it just takes away a bit of that wealth that's creating this massive inflation.
How much at this point does it need to fall before it's worth cutting rates? Because I mean, we were down 20%. Obviously, we've come all the way back, but that didn't earn a cut. So is it 30? Is it 40? Is it 50?
It's got to go down and stay down. Go down and stay down. Yeah, go down and stay down, and have unemployment tick up, inflation go down, and that could be it's going to happen at some point. It always has. It's a question of when. Like we pointed out, picking the timing is hard. I mean, I lost my hair trying to do that, but it's about when. Is this the year? I think it will be. I'm certainly looked that way early in the year. Now it looks a little less that way, but again, this is July. This is happy stage. This is where you're supposed to just buy, get away, and say thank you. But again, it's going to be what happened. It was going to happen by the end of the year, and it's these tariffs, this emboldened tariffs. I just cannot see how that's going to hit corporate profits. And then I look at like my colleagues who have been really spot on in the equity market forever, say, no, this is a manic stage. You're not supposed to go out overweight long equities at these levels.
So let's turn it back. I want to just bring up, altcoins, Scott. And I guess the question is, how high does Bitcoin have to go before we really get a bull market in altcoins, like a broad-based bull market?
Never. I don't know.
Okay.
Listen, so if I'm saying never, it probably means we get a face melting altcoin rally at some point where everything across the board goes. I mean, ETH has actually been outperforming Bitcoin pretty strongly for the past few weeks, which I think is interesting. And take a look at the chart, it's back above the 50 MA, but kind of getting rejected under the 200. We all know ETH's going to suffer versus Bitcoin when Bitcoin makes a big move to the upside. But ETH is kind of pushing a key level here, back above the 50 MA for the first time back in, looks like January. I mean, this is, ETH is making a move here to some degree, which makes a lot of sense with Ethereum Treasury companies and Ethereum spot ETFs and some demand for Ethereum, which a lot of that Treasury company demand is completely fake, to be totally honest, but that's the structure of what we have. But as I've said repeatedly, the bull market right now is in crypto adjacent stocks and not in altcoins. And I don't see where the volume is going to come directly for altcoins when now we have the big boys playing in our pool and they can make the same kind of returns in these crypto adjacent stocks. I mean, I showed you, I think BMNR probably, I don't know if we did actually, probably never talked about it here. Oh yeah, we did.
Talk
about it was happening.
last week.
That went up 3,800%. Well, since a week ago when it was topping on that conversation, it's down 70%. That's bull market alt season price action. So massive, I got to bump, dump, rotate.
I got to ask you a question, Scott. I get somewhat leading. I've heard that. I love that mantra. Now people are now adding Ethereum to their treasuries, or Ethereum treasury. How can we not consider that a number of these alts, maybe not all of them, of the 18 million, are becoming competition to what was supposed to be Bitcoin's main purpose as an alternative to digital gold? And at the same time, how can we not expect the alts to catch up when the Nasdaq's making record highs? That's just the way it always has worked.
I just think the money's not there for the alts, right? I do think that alts should behave like the NASDAQ. They should behave like tech and risk assets, but it's just too small of a market to really trail. And the same money that used to create that washing machine effect of an alt season is just playing in a different pool right now, in my opinion. And so if you want to talk about Ethereum treasury companies, the reason someone launches an Ethereum treasury company or a Solana treasury company or whatever else we're going to get treasury company, Rand Nooner actually laid this out very well on a podcast with me on Sunday, is that you start an Ethereum treasury company, a bunch of people who hold a ton of Ethereum send you their Ethereum. So there's no new money there. They're just transferring their Ethereum that they've been holding forever into this treasury company. That treasury company reverse merges, and because of the hype, trades at a 3,800% in this case, but a 10, 11, 12x to NAV. Now you have 10 times your money 2 weeks after you sent it. You get your Ethereum out, maybe some more, and you're playing with the market's money in a publicly traded stock. So why would any of the original people who were making money in crypto, the whales, the ones, the people who were in early on these, the people who engineered all this, why would they launch an altcoin when there's no interest there, when you can launch a stock? Well, and that's what's happening. But to answer your question, I think the treasury demand is going to be relative to the place of that token on coin market cap, just like anything else. So if Ethereum is 20% of the crypto market, I haven't looked at what it is, then I think Ethereum treasury companies will be 20% of the treasury company market. And we'll see these little ones all the way down, and people will be like, well, if I launch a Hedera treasury company, all the holders of Hedera will send their tokens in, we'll make a bit of money. And we all know how this ends, at least certainly for the people who buy the stock.
So that was a great podcast. I just want to follow up on that. It's classic signs of what Soros said, identify a bubble and join it. Classic signs of you hear and see at the end of bull markets. They always go out on extremes. And it's also the thing I've also heard a lot of people who have to have this risks of taking profits and paying taxes are trying to find alternatives. I'm like, oh my gosh, how many times I've heard that in my life at peaks. Just sell, take the hit, and pay the IRS their due share, and they say thank you for allowing me to be in this great country and do these kind of things. But this is these are kind of silly things that I just question is how long it can remain that irrational.
Amazing stuff. Yeah, I mean, to watch that stock go up 3,600% was incredible.
But like that was to me,
that was Tom Lee, right? Tom Lee.
And so I was going to say, so you used to have like crypto influencer X mention something. I'm not saying there's something anything nefarious, but like if they mention something that's a small cap, it goes flying. Right. A bunch of people then buy the hype and it goes down. I'm not saying that person traded on it or made any money. I'm just saying like, and now our influencers are Tom Lee and Donald Trump instead of like random farm animal Z, Y, and X. Right. So it's just they're playing in a much different pool.
All right. So As we come into the end of this week, we're coming into earnings season next week. We have the financials reporting. We saw Delta, by the way, reporting this morning. They did pretty well. Their stock is up. Do you guys expect stocks to behave well on earnings season? Do you think they're going to disappoint? Are valuations so high at this point that it's like hard to justify unless they cure cancer? Do you guys have any kind of ideas in that?
Well, I'll go, Scott. Thanks for pausing. I just point out what my colleague said. Gina Martin Adams said, we are in mania mode. Expectations for earnings are so high. Pointed out how the Russell is so cheap. It's usually a really good indicator of problems at peaks and large caps. And then there's also that issue that's July. The market always goes up in the month of July. To me, this is a froth you see near end of bull markets, rather at the beginning. But the question is, how high does it go? I mean, this could last a while. If it lasts through the end of the year. If it lasts to the end of the year, I'll be stopped out a lot of my outlooks, but I'm still sticking with gold and treasuries being the outperformers this year. And it's just, you got to get beat up a little bit on calls if you're going to be right. And certainly when you make, calls that are, haven't happened that are based on 100-year cycles.
Yeah. Well, one of the little tidbits that I'll just point out here is that, looking at GameStop, right? So back in 2021, this obviously was the mania along with AMC. This ran in January and February, and the stock market didn't top until November. So just to put it in perspective, is that manias can last a while. Now, arguably, we've been in one for a while, but it just is interesting to see when things do get crazy and then how long they can actually last. And I think part of it too is that there's been money sitting on the sidelines. A lot of money is now flooding in, even with no questions asked, right? No valuation concerns, just kind of chasing. And there's just a lot of that money and leverage, right? People are leveraging themselves up, which inevitably ends in tears, right? It causes that great big pullback and collapse. But again, leverage is leverage. I heard hedge funds are taking insane, like 100x leverage right now.
Oh, volatility is low. It's near the lowest. Bitcoin volatility recently, the 60, 90-day reached the lowest ever versus gold and the S&P 500. That's a breakout signal. It better well be up. It is up at the moment. But yeah, it's July. I just remember when I was on the sell side of the business, certainly in the trading pits, every single time it was like end of July, beginning of August, my boss would look to me, Mike, volumes are down. We need to pick up, because our job was to just get people to trade and keep them alive and help them hedge. And here we are. It's July. Volatility is low, and the market's just nice and just going straight up.
So let's turn our attention to commodities, right? Let's touch on commodities here. Gold to me, and again, correct me what you guys see in this chart, but I see you have this longer term trend line here, and price is trying to break it. So that could mean downside in the near term. And now on the other side of the coin, you have this parallel here, which tells me if it does break down, your downside's limited to probably around 3,070, where you have a bigger bull flag building. But I mean, what are you guys' thoughts on commodities? Silver also looks like it's on the verge of breaking out. Are you guys fans? I mean, Scott, do you dabble in commodities and gold and silver, or you're more just strictly on the stocks?
I've listened to Mike and bought gold. So I have exposure to gold, and it's been a very good play for quite a while now, but it's not that large. But I don't deeply go into the metal market. I always kind of viewed silver as Ethereum because of my crypto brain, and just didn't seem that exciting for a really long time. But then it does look on the verge of breakout, and when silver goes, it could really go.
Yeah, I agree with that. And it looks like it's trying. What do you think it's Mike?
Key thing about silver and platinum, they're both going up on the back of gold. Silver trades basically double the volatility of gold. It's called the devil's metal for a reason, because it'll rip your face off and make you go bald, which I did for me. And on a one-year basis, gold's up about 40%, silver's up half that amount. So yeah, silver's breaking out, but only because gold is. And silver's much more of an industrial mineral, so it's coming up on a little bit of back of copper, but that copper in London isn't going up. So silver's just catching up to gold. The key thing to really think about gold is, I'll be publishing on tomorrow, you point out the key levels. It's stuck between a range of 3,000 and 3,500. 3,000 is very good support. To get back to 3,000, you have to have the stock market to continue to go up, Bitcoin providing competition, and interest rates to stay high. Why buy gold in that environment? That's what pressured it before. This is what I think gold is front running. Yeah, it might be breaking that support here, but if you look at it, it's basically unchanged since it put that high in April. It put that high at the same time that Bitcoin and the stock market bottom. You see that the bent there, it's staying up. So to me, the thing is, gold is more likely to end the year above 3,500, with implications meaning that it's more likely to see bit back declining in risk assets like the stock market and Bitcoin. That's for me what it's front running, which shows you the risk if it doesn't happen. And then there's this concept of the Fed easing with the stock market making record highs. We know that's unlikely, but I think gold's figuring it out. It's basically now, I look at it as much more of a put on the S&P 500 at these levels. S&P 500 goes down, gold will have a reason to continue higher.
So yeah, and I think you have to look at that chart, and it is really amazing to see that gold has essentially chopped sideways, even with the Nasdaq and S&P making new all-time highs. I mean, that's remarkable resilience in gold. I think what Scott said is really intriguing, which is, you know, silver is kind of that Ethereum play where silver can go up really fast, really quickly, but ultimately it's more of a trade. And again, I'm not saying Ethereum is a trading vehicle, but altcoins more trading vehicles versus gold is the Bitcoin, which is kind of like what you hold for the long term, right?
I should have said that Ethereum is silver, to be fair. Yeah. To call silver the Ethereum when Ethereum's only been around for 10 years was a bit disingenuous, but you know, you got the idea there, I think. I mean, Gareth, how do you view this? Like, we don't get to ask you enough questions, man.
I'm in that same camp. I think that makes a whole lot of sense here in terms of what gold is doing. I mean, gold, again, this trend line to me, and I could take out this one below. It's really right now you're dealing with this trend line here, which starts in December of 2024. And you can see it keeps trying and then it keeps getting saved. Like, amazing, really, to be honest, how well gold is held up, like I said. But I'm actually in the camp that gold is due for a breakdown to this level. I just think you have to flush out some weak hands.
Mike, you agree with that, right? Mike, you've been saying
I'm yeah. Well, it's some ways it's the best way to enhance a good solid bull market is back up a little bit. What enhanced the crude oil bear market was pumping up for silly reasons up to 80. Now we're back down at 66. So yeah, I think that can happen. It's the thing, it's the fundamentals. But this thing, remember who's buying gold. It's the deepest pocket in the planet. Central banks are buying gold for good fundamental reasons. I think the FT just put out an article recently pointing out that the number 2 holding by central banks used to be the euro. Now it's gold. Because that's a significant accumulation, remembering the geopolitics of what happened. Russia and China's unlimited friendship that started in Feb 2022 and resulted in the invasion and then a lot of confiscation of Russian assets. So remember who's buying it. Also, the key thing that's shifted in gold is ETF holdings. They're running, buying in gold ETFs are running about double what you see in Bitcoin, but it's shifted to upwards to higher after 4 years of outflows. We have significant buying in gold ETFs. That's investors, I think, not only they've taken their profits from the stock market and putting in a risk-off asset, but they're seeing the valuation of the stock market. Things I point out, it's just getting way too high and looking for alternatives. And gold's the number 1 alternative next to treasuries.
All right. So we're coming to the end of Market Mavericks. I want to ask a question here for you guys, which is looking at the end of this year. So we're halfway through the year. The stock market has been down 20%. Now it's at all-time highs, all in the first half of the year. Do you guys think that the stock market is higher or lower by year end?
First,
Scott. Scott first.
That's a tough one. Probably higher. I mean, right now, if we're in a blue sky breakout, it's hard for me to, with conviction, say that we'll see prices. We're saying higher, lower than now, or whether it makes a new low.
No, I think higher from this point mid-year.
Yeah, I mean, I think Bitcoin. I truly believe Bitcoin will be like 130 to 150. So I can't really think stocks will be much lower.
There you go. So that's the key thing to point out. If anybody who's bullish Bitcoin has to put stocks in the same category, and they on Bitcoin almost always trade high correlation, 2 to 3 times the beta of the stock market. You have to put them together. To me, there is absolutely zero optionality in the markets ending here or higher by the end of the year. It's completely priced in. It's expected. We're on the screen. That's where the optionality comes in. That's where I think that's for me where the big trade is, and that's for me what gold's figuring out that stock market's more likely to give up and maybe be down in the year. That's a very low probability thing to say. I'm willing to be the contrarian on that because that optionality of that trade is phenomenal. See, for instance, a good example is our economics team, Anna Wong, does not expect the Fed to start cutting rates until December. Just imagine if they do that. There's only one good reason they would cut rates in December is things start telling them to go down. Bond yields are going down. Stock market's going down. And what does that mean for next year as we head towards midterms? So the scale, the potential for a massive next big trade, bond yields going down, gold going up, and everything else going down with bond yields is on the back of what might happen in the second half. And that's why I point out the key indicator is that gold maybe pushing down near 3,000 would be wonderful for everything else, but bumping up against 3,500 means everything else might be going down. And I just remember that signal from 2008, and the price of a gallon of gas got to $4. It meant sell everything. It was a different environment then, but the sore thumb now is back then, stock market cap to GDP was only 1-to-1, but the housing market was way over leveraged. Now the elephant in the room is the most expensive U.S. stock market in 100 years. We got to stay there. And there's anything that tweaks that, that is a major deflationary force.
Yeah, and I think that's an interesting point. I wasn't even thinking recently about the midterms, but it's weird because, like, you understand why Trump's doing all this trade war stuff now to get it out of the way by year end, so that before the midterms next year, maybe it's behind us. But at the same time, does he really want the markets to keep going up? Because it's essentially, if it keeps going up at this rate, there's no way that it can, in theory, that it should still be up by November of 2026. So a lot of things to go on here. And I think what we can do is just reconvene next week and see where we are. Thank you, gentlemen, for being with me on Market Mavericks today. Guys, follow them at the lower point. You can see Scott Melker and Mike McGlone's handle there for X. And we look forward to seeing you next time. Well, thank you for tuning in. Take care, guys.